For 3 years of my life, all I heard day in and day out on my spare time was a burger patty hitting the grill and making a sizzle noise. This was me working at McDonald's. And anytime I had extra time outside of school or whatever else, I would be, getting some money and making money at McDonald's, flipping burgers. But this gig is now a while back. Since then, I've struck gold, I've lost it all, and I've really went from McDonald's wage to riches all in my mom's basement. By the way, I'm still in my mom's basement. Today, we're going to be going over a quick recap of everything that happened, and then I'm going to give you 7 of the lessons that I learned the most that I think would just benefit you in your crypto journey. So let's dive in. But just before we dive in, this video would not be possible without our sponsor, and that today is Endax. This is a crypto trading platform that you can buy, sell, and trade crypto in Canada. It's actually one of the first ones that I ever used, and especially so to buy Cardano, one of my favorite cryptocurrencies. So if you want to check it out, click the link down in the description. You can sign up. You get $15 free when you deposit $100 or more, and it's a great trading platform. Thank you, Endax, so much for sponsoring this video. Today, I have another McDonald's story for you, how I got rich with McDonald's essentially, and also how I lost it all. And if you want a quick recap before we dive into the 7 semi-concise lessons, then here it is. First, I made money working at McDonald's, saved up quite a bit. 2, I built up my savings, some more than I already had, and also 3, I then quit McDonald's actually and school, which was in my 3rd year or my 6th semester of college. Then 4, I invested in crypto and also NFTs, got to get some NFTs. And I also documented the process. So I made YouTube videos. This is kind of what I'm still doing today. I made a bunch of money in NFTs because I had an audience and because I was basically, doing stuff in NFTs. I was every day basically looking into NFTs and making plays. And then 6, I actually lost pretty much all of it. 70% of my crypto I lost. And then now the dollar valuation of my crypto is down, pennies on the dollar really. And the current phase that I'm in right now is rebuilding and also adding to my investments and growing them back up. Now, if that summary satisfies you, then by all means, click off the video now. But the real juice in this story to me is the things that I learned from making these major mistakes. And I've shared them before in the channel, but a lot of the people either need reminders or they haven't seen the channel before. But in any case, let's dive in. Lesson number 1 is one that I've heard before, but I didn't really take it to heart until it happened to me. And you may not either, which is fine. I think learning from your own mistakes is one of the best ways to really learn. But the lesson is that quick money is fleeting, and any riches that you come across that are earned rather quickly, with not much effort put into or really time, then they're likely to evade you these riches. You're fumbling something because you're not prepared, or you didn't really fully earn it. A likely outcome is that you're going to lose it. This kind of is what happened to me in crypto. I made a lot of money fast, and I don't know how to deal with taxes because it all came so quickly, and I made a poor decision to hold all of it, and then I had to pay down those taxes. And quick money in general is just fleeting. You think it's going to come easy, it's not, and if it does, likely you will lose it just as easily. This is why I choose long-term investments and try not to focus much on the quick money, but the long-term wealth and building that. Lesson number 2 though, first slow, then all at once. Oftentimes, anything in life that's a progression curve or some progression to it, it seems like you can't make any progress. You're working out, your body's not changing. No results are showing up after weeks of dedication to make progress. Even if it's on your business or, the growth of revenue, things like this, it just seems so slow at first. But then suddenly, if you keep going all at once, the results do actually come in and things happen fast from that point. Like this graphic that I'm going to try to show on screen right now. Someone is looking to mine diamonds and they give up right before they get there because the progress wasn't coming. They're just mining the same dirt over and over again. But little did they know what was coming. And this kind of also applies to technology curves, making progress in many cases, and likely can apply to crypto in a lot of ways too. Lesson number 3 is about crypto euphoria and how everything is pretty much temporary. A good reminder in life is that any emotion that you have is usually only temporary. I mean, not always. There's exceptions to every rules, but you may be happy now and you may be sad next week. Feelings and emotions, they change very often and frequently. This applied to the sentiment of a crypto market when prices are reaching new all-time highs and no one believes it's going back down to 80% less than it is right now ever again. It's impossible. These emotions, if you stick with them and only go by them, the euphoric ones, they don't really serve you very well at all. And everything, including the all-time highs of crypto, are actually pretty much temporary. Yes, there may be a new all-time high, but yes, there also may be another 80% drawdown in the market, especially when we have bear markets in play. And a lot of the time when we were going up and everything was euphoric in crypto, when I first joined and prices were going up, I thought my investments will never go back down. I was in that line too. But when everyone is over the moon, it's probably a good time to step back and take the emotion out of it. Use logic first. And honestly, planning ahead now is kind of the way to take emotion out and make better decisions for your investments. And I've since implemented this personally. Keep in mind, I am not a financial advisor. I'm a dude in my mom's basement, and everything I do is for the sake of myself, especially the mistakes I make. So you're going to have to figure out most of this stuff on your own, but these investments hopefully can provide some insight in a path you may be able to take, but don't quote me on that. Lesson number 4 now, community is everything, whether it's running an NFT project or being a part of a group of like-minded individuals. In general, having a community is where things get easy, and when they are hard, they become easier. So even if it's not as favorable of conditions as it once were, having a community is extremely helpful to boost morale and boost overall optimism rather than pessimism, because it's easy to be a pessimist. It's a lot harder to be optimistic about things, especially in times of doubt, fear, and uncertainty. I'm not saying just say that everything's going to work out and it will, but I am saying that, hey, there's a lot more upside than people are realizing, and it's good to point those out when people are in times of basically, hey, everything's gone, everything's pointless, and things like that, which doesn't really help anyone. Communities in general are the backbones to everything. They keep people not only informed, but supported. Builders, creators, these people need communities, and without communities backing people, things fall apart much easier, much quicker, and much more likely. Lesson number 5 is about major asset depreciation. I hope I said that word right. But in reality, no one knows where the market is going to go next at any point. Most of what we can do now is just to prepare for any scenario. And a likely scenario in crypto is that if you invest in crypto, you are going to see some major depreciation in your assets. That's just a big part of crypto, having bear markets, and the fact that pretty much every asset in crypto is going to depreciate during these market stages. When Bitcoin and the big boys are going down, everything else usually does too. Now, there's going to be short-term moments of prosperity and, ways you could probably capitalize if you could see the future. But in general, there's going to be a large thing to prepare for any crypto investor. And that's the fact that their investments are going to go down a lot before they come back up. Knowing this and preparing is pretty much half the battle when investing in crypto. And me personally, I only go by the motto, only put in when you can afford to lose. But for me, living in my mom's basement, that could be anywhere from 90 to 99% of my wealth. So tread on your own feet and do not necessarily follow what I'm doing, because it is risky out here. But in tune with that, there's also the fact that wealth is created. It's not just sat upon. And there's a ton of people, including myself, I used to be one of these people, just sitting around waiting for their investments or their crypto to come back up and put their life back on track because they now have money, basically waiting for a bull market to make them wealthy. And I made videos on this before, but honestly, in reality, wealth can be created by you, and it's much easier to up your odds if you're taking action every day to do so. You don't need crypto to save you. You can build your own leverage and work towards making more money to invest long term with too, if you'd like, while the bear market gets deeper on your own without just waiting there and pausing your life. Make a business, a service, learn valuable skills, and take some action. The final lesson and the big blow to basically how I lost all my money is death and taxes. Two things are certain: death and taxes. And taxes, if you don't get ahead of them, are going to come and bite you in the butt or take a bite out of your entire net worth, which was my scenario here. But essentially, put aside money for taxes, especially if you're someone who is making money in crypto and making a substantial taxable, don't know what substantial is, a substantial taxable amount. So if you're making money in crypto and it's enough for you think you get taxed, put aside money to pay those taxes, essentially. I did not do that. I held my crypto and then I had to sell it when it was 70% down to pay the taxes on the full amount. And I essentially lost all 70% of my crypto, because even though you can claim a loss on your taxes, if it's income tax, you can only claim it to a certain extent, and you're going to be paying a large bill or footing a large bill when you don't have this money floating around, this magic internet money that is now worth so much less, because US taxes don't care or Canadian taxes don't care. So just be careful about that, especially for someone like me making money in crypto. You have to pay attention to these things or you're going to get a major bite out of your wallet and even progress towards building a portfolio in crypto. Anyways, working at McDonald's, although often looked at as the bottom of the barrel, is by no means a bad place to be. What I think matters most is someone's ability to just reach where they want to go for and start work towards getting there. For me, working at McDonald's kind of made me rich or insightful in some kind of way because it launched me into working for myself, making and losing a bunch of money in crypto, and just having a large appreciation for all the people making McDonald's memes and working at McDonald's during the crypto bear market. Anyways, that's all for today's video. If you missed my last article or video, it was actually also about McDonald's layoffs and had some interesting stuff in there too. And yeah, thank you Index so much for sponsoring this video. That's all I have for you guys today. This video was originally a newsletter. Check out the links down in the description so you do not miss it coming to your inbox. See you guys later. It's been your friend Jack. Peace.